I'm Sarah Hashimoris for SmarTrend News. It's Friday, August 6th, and this is your morning market update. U.S. stock futures are trading lower Friday following the Labor Department's non-farm payrolls report for July that showed U.S. employers are continuing to hire, but at a sluggish pace. The Labor Department reported that private sector payrolls rose by an estimated 71,000 during the month, weaker than economists' expectations for a rise to 100,000. Total non-farm payrolls fell by a seasonally adjusted 131,000 in July, but the lost jobs were attributed to the temporary U.S. Census jobs. The unemployment rate held steady at 9.5%. In corporate news, Progress Energy reported second quarter EPS of 63 cents, marginally topping consensus estimates of 62 cents per share. Revenues for the quarter rose to $2.37 billion, missing consensus estimates of $2.47 billion. Magna International reported second quarter EPS of $2.59, topping consensus estimates of $1.46 per share. Revenues for the quarter rose 63% year-over-year to $6.1 billion, ahead of consensus estimates of $5.4 billion. Taking a look at where the markets open, the Dow Jones Industrial Average futures are trading 77 points below fair value. The S&P 500 futures are trading 9 points below fair value, and the Nasdaq Composite futures are trading 16.75 points below fair value. For more on what's happening in the markets, let's turn it to Andy Zamfotis from Lagard Capital.
Morning. Well, after yesterday's quiet session, we're seeing a lot of activity this morning. The unemployment number was released, came in at minus 131,000. That's pretty much double what was expected. We were only expecting about 65,000 losses. Last month was also revised downward to minus 221,000 from minus 125. Now, a lot of that was census workers coming off the payrolls. But even on the private payroll side, that was much lighter than what was expected. We were looking for 90,000 jobs. That only came in at 71,000. So I think that disappointment is the reason why we're seeing equity futures kind of fall down here to about 80 points below fair value. The only bright spots in the report where we said the hourly work week and hourly earnings tick higher, but I don't think that's getting any credit given the kind of disappointment that's being felt on the private payroll side as well as in the headline number. The unemployment rate did stay flat at 9.5%. The expectation was for it to tick higher. But I think a lot of people are realizing that's probably due to an increasing amount of discouraged workers, and so the workforce is possibly shrinking a little bit. So I don't think that's being viewed as positive either. In terms of reaction on the bond side, we're seeing now the 2-year Treasury fall below 0.5% for the first time. So that's pretty indicative of where people are kind of moving money now into safety. Next week we do have the FOMC meeting, so it'll be interesting to see if we get any talk of additional quantitative easing, and we're seeing the dollar fall in reaction to what may come next week. So a lot of political ramifications as well. There was a rumor yesterday there might be an emergency stimulus meeting kind of called that Nancy Pelosi was going to get Congress back in from their August recess. So this could be an exciting week next week as we're seeing right now the kind of fallout from this somewhat disappointing number.
Thanks, Andy. I'm Sarah Hashimoris for SmarTrend News. For more news and market analysis throughout the day, you can visit our YouTube channel at Trade the Trend or our website at TradeTheTrend.